the stock market is changing for dividend investors as we know it. This is absolutely insane. For those of you that don't know what's been going on, 3 funds came out that are weekly dividend payers by a group called Roundhill. These are ETFs, they're actively managed, and they pay weekly dividends. Now, they took the investing world by storm, specifically for those wanting income, because they pay weekly dividends, which was unheard of. And now, people are following their lead. YieldMax now is converting 2 of their funds to weekly payers and switching up how their distributions are paid from each fund, which is so interesting. We're going to talk about that later in the video. But there is another group, the Defiance ETFs. I just made a video about one of their ETFs that was yielding over 110%. They are now going to convert that to weekly dividends as well as a few others. So we're going to go through all of these funds that are switching to weekly dividends. We're going to do a full breakdown. We're going to do a drip calculator on each of them to see how they have been performing. And we're going to check out the yields currently. So as far as we know, these are all either converted or planning on converting to paying weekly dividends. If you like weekly dividends, if you like making money, if you like investing, like and subscribe. It helps me out a ton, and I really appreciate you guys for doing that. If you want more updates on all these funds, they will be coming out. I'll be doing a video probably on each of these funds within the next couple weeks here, because this is insane. I'm super excited. So again, don't forget to like and subscribe. Let's jump right into the first ETF switching to weeklies. I'm going to start with the Defiance ETFs that are switching to weekly. So we have it listed. This is the prospectus from YieldMax. It looks like this one, as well as JEPY and QQQY, are all switching to the 0DTE, which we see right here. So here's some facts to back this up. It's not just speculation. Really, really crazy. And it's effective immediately. It says right here, each fund's principal investment strategy is supplemented to reflect the use of options that expire on the same day, 0DTE in particular. Now, that alone wouldn't mean they have to pay weekly, but they are. They have said that. And it is crazy. You can actually go down and see there's a ton of stuff about these, so check them out for sure. And people have been talking about this because it really is kind of game-changing for people that want income every single week. So I'm super excited about this, and I think that there's so much potential. Now, Defiance ETFs, I haven't done a lot of research on them. I'll be honest. I've only made the one video on the one that I thought was pretty crazy, and its NAV erosion was rough, but it was yielding about 20%. If it can continue to yield 20%, I don't care if the NAV erodes. It's yielding 20%. So what we're going to do now, we'll jump into each of these funds. We're going to start with YieldMax because I just made a video about it, but let's check out this yield and see what is to come for this fund. So YieldMax, if you guys didn't catch that last video, it is a put write ETF on the Russell 2000, which means instead of writing covered calls, they write puts. And I mean, that's not good or bad. It's just different depending on what you're looking for. Right now, they say monthly, but again, they are switching this over. And the distribution rate, 110.96%, which is absolutely insane. Absolutely insane. So what surprised me with this one, I mean, we see that the net assets is already up from the last video by over 6 million. I believe it was 127 million last time I made a video, and that was just a few days ago. Expense ratio is the same. And you can go through, check the performance. It hasn't been spectacular the last month, but overall it's pretty decent. We'll be able to check that with the drip calculator in just a second, but I'm so curious what you guys think about the Defiance ETFs. Drop a comment and let me know which one you like the most, or would you prefer the YieldMax ETFs? Looking at the Defiance team, they're a little bit younger, and this fund is this group is a little bit less known, so I'm curious if people are nervous or not. But let's throw this into the drip calculator. So our drip calculator shows an annualized gain of 20.24%, which is less than the 110 that they say in their distribution rate, but this is still very, very solid. If you come into this saying, oh, it's not yielding 100%, I'm upset, I've got news for you. It's very rare for a fund to yield that high consistently, and 20% is a phenomenal return. I mean, the S&P 500 very rarely returns 20%. It has in the last couple of months because of the market, or I should say the last year. But still, this is a really solid return. And if they can convert this to weeklies and keep that return, keep that yield, keep the money flowing, but now every single week, your compounding will be even better and the return would be better than this. So I'm super, super excited. Let's look at JEPY and see what its yield is. JEPY. I was going to do a different video on this because the distribution rate is also 72.04%, an insane return. But this one is a put right on the S&P 500, and they say it's the first. So this is the first one. Someone in my comments actually asked me, do you know any puts on the S&P or any put ETFs on the S&P 500? And I said no, and later this one popped up. So we see similar to YieldMax, a lot bigger assets under management. This is a bigger fund at 96.95 million. I wonder how much this has been changing recently, but pretty solid performance we've seen year to date, 9.15%. And you can go through and check out the top holdings, and they have not paid out weekly yet. I believe some of the others have, or maybe I'm thinking of the YieldMax funds, but I am waiting. I'm going to be watching this one closely just to see what's coming. And so we can actually see they have the future ones put out. I'm not sure when they're going to be converting this, but I'm really, really interested in seeing when they do and seeing how these funds are going to work. Let's check out the drip calculator and see the return on JEPY. JEPY in the drip calculator with dividends reinvested, a slightly worse return, but still pretty phenomenal. Average annual total return is about 16.7%. Phenomenal return again. People say, no, it's not the 70%, but this is a very, very solid return for any fund. Plus, with weeklies, it will increase. And the way that that works, I'll explain it now because I've had a couple comments about this. Oh, there's no difference between weekly and monthly, and there is. And there only is if you are reinvesting the dividend, or if you're reinvesting the dividend into another fund even. Because what that allows you to do, it allows you to buy more shares sooner. And so like with every month, you're paid once on a monthly ETF. With weeklies, you're paid 4 times, right? Because there's 4 weeks in a month typically. And so what that means is when you're paid, let's say you're paid on the last day of the month versus every week, those first 3 weeks that you're paid, those dividends are already in your account. My cat just walked in front. They're already in your account and they have been wrapped up, and now you are making your 4th dividend with those ones as well. It's not the best explanation, but those basically, it's compounding. So all of the money that you got from those first 3 dividends has purchased more shares. And so those more shares, even if it's only a little bit, you're now making more money because you own more shares. That's a better explanation. So it is really, really interesting. And I think it's a phenomenal way to just grow your money so quickly and get that compounding effect. Again, JEPY, 17% return, not bad at all. Let's jump into QQQY, one I've never even looked at before until I started researching for this video. I don't know how the Defiance team is having these distribution rates of 105%. Absolutely phenomenal. These are the same as the YieldMax rates, and I didn't think anyone would try and compete with those. Now, I'm sure the return is less, but for QQQY, it's the NASDAQ 100, their put-right ETF strategy for investors. And now it still says paid monthly. Like I said, they're converting it. This one is huge, 200 million, more than double the last, and more than 6 times the first IWMY, which is what we'd expect. The NASDAQ is extremely popular, more than the S&P 500, I'd even say, and definitely more than the Russell 2000. And it has been performing well as well. So we can see the same expense ratio. We're going to see that with nearly all of them, I'm sure. And you can see the return year to date. Market price is 3%. They've had a rougher go of it. Since inception, 11, and the NAV return has been about 16. So not bad by any means. Let's throw this into the drip calculator and see how it compares, because this is extremely, extremely insane how high this distribution rate is. This one has actually performed the worst out of the 3, and still not bad with an average total return of 15.55%. And it looks like it's been continually growing. At one point, it was up over 20%, and then it sold off a little bit as we've seen the market pull back. Still phenomenal. And with dividends not reinvested, you're looking at a 12% return, which is, again, still good. You're still pulling out that money. And again, this will increase. The drip will increase as long as they switch to the weeklies and the price action continues. Really, just a really interesting fund. I keep saying really 1,000 times, but I'm curious how well these are going to work out and how they're going to compete with the Roundhill funds and the YieldMax funds. So what we'll do now, we're going to talk about the YieldMax funds. They have 2 that they're converting to weeklies and a whole schedule change for their dividends, which is going to be really, really interesting. I'm curious to see how they turn out. Let's go ahead and jump to YieldMax's website. Actually, before we jump to the YieldMax website, I couldn't find anything in their prospectus. So we're going to look at this. This is just Morningstar. They're talking about the funds, and beginning September 18, the following changes will be implemented. Now, YieldMax, these 2 funds, YMAX and YMAG. YMAG is my favorite YieldMax fund. Will aim to make weekly distributions, and we've actually already seen that take place. All other YieldMax ETFs distribution cycles will be staggered throughout each month. We're going to talk about that. They have a bit more on the website about how that staggering is going to happen. But basically, they're converting all their other ones. They're staying monthly dividends, but the schedule is being switched in order for them to pay weekly. So if you have a group of a few funds, you're going to get a payment every single week from a different fund, which is a phenomenal idea. That way, you're not getting one huge payment. You're getting it staggered, and you can live off of that weekly income or reinvest it. I would prefer they actually pay weekly, but this is a really good option for the ones that they don't want to convert to the weekly payers. So we'll jump into, let's start with YieldMax and see just how this fund has been performing. I think it's been doing pretty well. Let's jump over to YieldMax. So jumping back to YieldMax, this was the intro screen. We can see a distribution rate of 15%, which is good. Not YieldMax standards. They definitely typically have insane distribution rates, but I'm curious how the swap over to the weekly dividends is going to affect that rate. Now we can see they've already paid out weekly. So typically they pay the 13th to the 16th, maybe a little bit later. They paid out the 18th of September and the 25th. They've made 2 payments. And what I'm really interested about is the difference in what they're going to be paying. So we've seen the consistent payments of 50 cents, 60 cents, 70 cents, 70 cents, 60 cents, 60 cents, and now they're at 22 cents. So if you add this up and you double it, you'd get 44 cents. So you'd get 88 cents, which is significantly higher than they have been paying. I wonder if the yield is going to go up. I'm not sure. If they're able to increase the yield throughout this process, that would be phenomenal. But again, people have already been paid on the 20th and the 27th. And there's another fund that YieldMax YMAG, which again is my favorite, that is doing this as well. But you can come on here, check it out. Let me know what you guys think. They're going to probably be updating a lot of this stuff and showing the 0 DTE and how that works. For those of you that aren't familiar with options and how they work, it's a little bit complicated, but the way these funds are able to pay every single week is they have 0 DTE options, meaning 0 days till expiration. And that is what Roundhill has been doing and why their funds have been so popular and booming. And because of that, you're able to recoup money every single day the market is open and pay that out at the end of the week. So that's how they're able to do that rather than just having one long. Like a monthly or even longer for ones that pay quarterly. So let's jump over to the drip calculator and see how YieldMax has been performing. YieldMax has been doing really well. Total return so far 13.84% and an annualized return of 20.21. So up there with IWMY, even a little bit better. And again, I've said this before, I'll say it again, with compounding and weekly dividends, you will make more. So that is phenomenal as long as this price trend continues. Now, with dividends not reinvested, you're just a little bit worse, but not by much, which is really, really interesting. Normally, you see over a long time span, that would definitely change. But because this one has only been trading for a little bit, let's see, less than a year, that hasn't had that long of time to affect it. So the longer you hold these, you would see a larger discrepancy between the reinvested and not reinvested. So still very, very interesting. Let's check out YMAG, my favorite fund. For those of you that don't know what YMAG is, it is an ETF formed of the Magnificent Seven companies, which is Apple, Amazon, Google, Facebook or Meta, Microsoft, Nvidia, and Tesla. And it's yielding about 10.5%, which is, again, really low, but this one is now paying weekly. And the reason that this one, I believe, pays a little bit lower is because they have, one, these huge companies usually have a little bit lower volatility, so the options writing is going to be, you're going to make less money off of it, because they're not so all over the place, although sometimes they are, especially Tesla recently. I sold my Tesla today for a 28% gain. I'm pumped. If it goes back down, I will be buying more. I love Tesla. But I thought I'd throw that in there. Then we can go down and we can see this distribution history. So we see they paid out on the 18th of September and the 25th again. This one paying 40 to 60 cents, almost to 70 cents. And we've seen a near 20 cent dividend and a near 17 cents. So roughly around still 70 cents per month per share, which is not bad. And again, with the compounding, that will be absolutely phenomenal. I'm so curious to see which of these weekly funds pays the best. I might do a new challenge, which is going to be putting $100 into each weekly paying ETF. Let me know if you'd want me to do that. I think it'd be so interesting to see how the NAV erosion counters with the higher yielding ones versus the lower yielding ones versus price appreciation, because we've had so many of these now, and I have a feeling there's going to be more to come. I really, really do. And so I might do that. Let me know if you want me to do that in the comments. I'll throw that into our high yielding fund on Robinhood, and I think that could be really, really cool. So that being said, let's throw YMAG into the drip calculator. And I believe that this one should be one of the better performers of the ones we've talked about today. I tried to warn you guys. Total return 21.71%, annualized gain of 33.44%. Crazy. This will only get better. I've said it once, I've said it 1,000 times, only get better with the weekly dividends reinvested. And again, without reinvesting, you're still just about 2% under at 19% return and a 30.63% return total, annualized gain, which is about 3% under. So not terrible, but this one again has only been around for a couple of months. What is that? 8 months now, pretty much. I mean, people have waited their entire lives for funds that pay weekly. I didn't even know it was possible until Roundhill did it, but all of these weekly funds have insane potential, and I think that they will all do well. Now, don't quote me on that. Some might drop off. It really depends on NAV erosion and how they perform, but I think because of the fact they pay weekly, we will see a crazy influx of money from investors. I've seen it all over YouTube already. People are talking about them. People want to know how they perform, and I am one of them. So like I said, I already own all 3 Roundhill funds. I'm going to be buying YMAG. I don't own it yet. I know it's my favorite. I've just been waiting. I have too many things going on in my life that I need the money for, but I will be putting my max contribution into my retirement account, which is tax exempt, and throwing that into a lot of these funds for your viewing pleasure. Did you guys forget about YieldMax's new schedule? Because it is a really big deal. So we can see, I want to read a little bit of this. This is the same as what was pulled from that article. Basically, they are addressing investor demand, which we like to see, and they want distributions on a more frequent basis. The result of this change is that investors now have various options to either receive weekly distributions from YieldMax ETFs or to create a portfolio of monthly distributing ETFs, which have a staggered distribution cycle. The end result will be 8 ETFs making distributions every single week. And so here's the new schedule. It looks complicated, but I promise it's not. And so they, as they say, these are all subject to change, and the new distribution groups by ticker. So basically you have A, B, C, and D. And so what they want you to do, I believe, and correct me if I'm wrong, is they want you to purchase one from each group because these are the different payments. So tsly, CRSH, the Google, Ybit, all of these are going to pay the same day. And they're going to pay the first week, I would assume. And then you have Group B, which is going to pay the second week, which is NVDY, DIPS, Facebook, JP Morgan, all of these. And then you have Group C, Coney, AMDY, Netflix, PayPal, UTLY, and then Group D, and so on and so forth, which is just MSTY, AMZY, APLY, and a few others. So this is really, really interesting. So what they mean by this is you'd buy, like, let's say you like Group A and you want to stagger these. You want weekly payments. So you buy tsly, and then you would also buy the same amount of FBY, and then you'd buy Coney, and then you'd buy AMZY. And that means you would make a payment from one fund every single week. And so instead of it being paid out in one lump sum at the end of the month or in the middle of the month, these will be staggered. And so what you can do, and which is really cool, because you can say, oh, well, this isn't as good as weeklies because you can't reinvest, but you can. So you can take whatever you got from tsly and roll that into, let's say you own NVDY, roll that into NVIDIA, and then take all the money you get paid out from NVIDIA and roll that into Coney, and then so on and so forth from Coney to MSTY. So you can continually just reinvest those, and you'd have to do it actively. You'd have to go in and pay for it and, take the money you got and put it into the next one. But this would really, really help for people that want that consistent income, whether to grow their portfolio or just to have more money coming in at the end of every week. So I think this is a phenomenal idea. I never thought about them doing this. And even though it doesn't change the distributions and whatnot, or I should say distribution yields, it is still just something that I think they're listening to the community about. And they are trying rapidly to fight with Roundhill. I guarantee it, because Roundhill's AUM, or assets under management, has been growing like crazy as people buy into the funds. So you can see this explains it. So Group A, all the ones in Group A will pay on the 2nd of October. Group B will pay on the 9th. Group C on the 16th. Group D on the 23rd. And then again on the 30th, Group A starts again. And so you just are continue to do this. It's going to roll over and roll over, which is insane. So you have the new ex-dividend date. You have all this stuff. There's more on here if you guys want to go check this out. It's on the YieldMax website, and you can see exactly the group allocations and what the reference asset is. And so what I'm curious about is, are these groups going to be separate funds? Is that what they're saying, where you can buy a Group A ETF that will hold all of these? Because that would be really cool, because then you wouldn't have to put all of the money directly yourself. It would auto reinvest it technically, and that would be a really, really cool, groundbreaking kind of thing to do. But I'm not sure how they're going to do this. If you guys know, let me know, because I'm really, really interested. And then again, they say all YieldMax ETFs shown in the table have gross expense ratios of 0.99. I didn't know YMax and YMAG are different because they have a management fee. But still, very interesting stuff. I think YieldMax is making really smart moves, and they're going to fight. I think the Defiance ETFs have some catching up to do. If they can continue their yields, they'll grow in popularity, but YieldMax is smart with this, and Roundhill is, I think, already a few legs ahead. So I'm curious how all these funds are going to combat, and what else is going to join this. Are we going to see some JP Morgan funds going weekly? Because that would be insane, and I'm sure the weeklies are going to grow in popularity. So I hope you guys enjoyed this video. As always, don't forget to like and subscribe. It helps me out a ton. Join our free Discord. We talk stocks, we talk weekly dividends, we talk everything in there. And yeah, I appreciate you guys for watching, and I hope to see you in the next video.